Was this a good report, Michael, or not, given where we are at this stage of recovery?
It wasn't a great report, but certainly better than last month. I think if we go back a few months, many forecasters were expecting that in the spring and summer months we would be adding about 1 million jobs a month. So against those expectations, this is clearly a disappointment, but I think expectations have gotten reset after that April number. And I would say this is, it's not what you'd want, but it is progress. As you mentioned, the unemployment rate came down. We did create over 500,000 jobs. We would like to see that pace pick up, but there were some other good things. We saw wages pick up, which is certainly good for employees, at least. And you did have a big move down in people who are permanently unemployed. So that was also another favorable feature in what was an otherwise kind of a so-so report, I think.
Yeah, I mean, still more than 7 million jobs in the hole since the COVID pandemic. You mentioned the pickup in wages, up 0.5%, better than expected. Where does that go in the inflation debate about whether this rise in prices now trickling into wages could be more lasting and could prompt a move from the Fed?
Well, I think it certainly muddies the waters a little bit insofar as the transitory narrative that the Fed has been applying to consumer price inflation arguably now also applies to wage inflation, because some of the factors that may be pushing up wages, or at least limiting labor supply, are probably also transitory in nature. So those are the expanded unemployment benefits, which expire in September, child care responsibilities, which may normalize in the fall, and fears among some job seekers about ongoing fears about the pandemic. All three of those factors should ease over time, but it does add some, some more noise to what is otherwise a pretty noisy picture of the economy and a noisy picture of the inflation outlook. So I think it's yet another reason why we're going to have to kind of reserve judgment for a few months on where both price and wage inflation are ultimately heading.
So do you think, Michael, that the Fed will be changing its expectations at all, or does it change the timeline of when you think in their comments and interviews or in Fed meetings that they will meaningfully change people's expectations of when tapering will begin?
Right. So I think it's important to remember that after that April number, which was only half as strong as the May number, we had several Fed officials, senior Fed officials, come out and talking about tapering at upcoming meetings. So I think having this number in hand doesn't really change that. So I would still expect at the June meeting, which is in less than 2 weeks' time, that they will begin the conversation. That said, given that we are, as you mentioned, still over 7 million jobs in the hole, that conversation is just getting started, and I don't think it will lead to a hasty move toward tapering. But they got to start somewhere, and given the comments we had before today's number, I would think that's consistent with that conversation starting in June.
Shepard Smith here. Thanks for watching CNBC on YouTube.